Have you ever wondered how analysts actually read the crypto market? Like, how do they see a big shift coming? Well, today we're going to break one down. We're looking at a fascinating market report from way back on January 7th, 2026, to see exactly how they tracked a major change in where the money was flowing.
All right, before we jump in, we have to get this out of the way. It's super important. What we're doing here is looking at a historical report. This is purely for educational purposes, okay? It's all about learning the techniques. It is absolutely not financial advice for what you should do today. Got it? Awesome. Let's get into it.
So this analysis we're auditing, it came out swinging with this huge, bold claim right here. I mean, talk about a statement. They're basically saying a massive change is happening right now. But look, anyone can say that. The real question is, can they back it up? So let's see how they built their case.
Okay, first things first, you always got to start with the big picture. The report calls this the macro engine. You can think of it as the overall mood of the market. Are people feeling risky and ready to buy, or are they scared and selling? This is where the whole story really starts.
And right here, these two charts tell you everything you need to know. On the left, you've got USDT dominance. When this chart goes down, it means people are spending their stablecoins, their cash, and buying crypto. So check it out, new money is flooding in. But, and this is the really interesting part, look at the chart on the right. That's Bitcoin dominance. It's also going down. So all this new money is coming in, but it's not going into Bitcoin. Capital is actually rotating away from Bitcoin.
Okay, so that's the macro view. Now let's zoom into the nitty-gritty, what the report calls the micro game. Now, if money is flowing out of Bitcoin, you'd expect the price to start dropping, right? Well, that's where things got weird. It leads us to what they called the case of the invisible buyer.
This was the big mystery they had to solve. The data showed that sellers were going for it. They were hitting the market pretty hard. But the price, it just wasn't falling. It was like it hit an invisible wall. So, the question is, what kind of force was propping it up?
And the answer is a concept called absorption. It's a really cool market dynamic. Just picture sellers throwing baseballs as hard as they can. But instead of hitting the ground, someone is standing there with a giant catcher's mitt, just catching every single one without even moving. That mitt is a huge stack of passive buy orders, just sitting there, quietly soaking up all the sell pressure.
And here is the clue they found. See that green line at the bottom? It's called spot CVD. All you need to know is that when it's going down, it means sellers are in control. And as you can see, it's trending down hard. But look at the price up top, flat, completely stable. That's a textbook divergence and a huge sign that absorption is happening. Someone is buying everything the sellers are throwing at them.
So where's the proof of this invisible buyer? Well, they found the smoking gun right here, in the order book. Just look at those bids stacked up right below the current price. You see that? Over 600 Bitcoins sitting there ready to buy. That's not a wall, that's a fortress, basically creating a giant floor under the price.
Okay, so let's recap. We know money is rotating out of Bitcoin's market share, but we also know that big buyers are keeping its price stable. So the billion-dollar question is, where is all that money going? And boom, here's the answer, clear as day. This is the ETH/Bitcoin chart. It measures Ethereum's strength against Bitcoin. When this chart goes up, it means ETH is outperforming BTC. And it wasn't just going up, it was breaking out of a major structure. This was the spearhead, the #1 target for all that capital leaving Bitcoin.
So now we have all the pieces. The macro environment is bullish, Bitcoin is being held steady by a whale, and Ethereum is leading the charge. Now we get to the final step. How do you turn all that analysis into an actual, actionable strategy?
The main conclusion was this. The market had split in two. You had to play two different games. Bitcoin was in a defensive, safe absorption phase. It was the stable foundation. Ethereum, on the other hand, was in an aggressive attack phase. It was where the explosive action was happening.
And that led to this two-part strategy. For long-term holders, the call was pretty simple. Just hold your Bitcoin, it's got that massive support, and of course, hold your Ethereum to catch that big uptrend. But for shorter-term traders, the focus shifted. The priority was to look for long positions on ETH. You'd only really want to buy BTC when it was down at those key support levels, pretty much trading alongside that giant buy.
Of course, any good plan needs an exit strategy. The report included this critical system alert. The whole idea, the whole rotation, depended on that macro engine, on capital flowing into crypto. If USDT dominance suddenly reversed and went back above 6%, that would be the signal that the party's over. But until then, the message was clear. Enjoy the rotation.
And they summed it all up with this brilliant line. Bitcoin sets the stage, Ethereum performs the play.
Bitcoin was providing the stability, the foundation that allowed other assets like Ethereum to really shine. It's a classic capital rotation story. And looking back at this, it makes you wonder, in today's market, what's the one signal you think tells you the story is about to change?